All right, so we were taking a look at the euro dollar in the last video, and we were waiting for a bat pattern entry. It's actually setting up a trend continuation trade towards the downside. Anyway, so last video we were taking a look at the euro dollar, bat pattern. But in this video, I want to go over the euro pound 4 hour, and the pattern that we'll be looking at is the Gartley pattern. And sometimes the Gartley pattern doesn't set up a really good risk to reward, and you can't enter the trade. That does happen. So I want to go over exactly what I do and how I adjust and change my entry stops and targets. So I have to do it again. I'll start again. Basically, what we're discussing here is the stop loss placement here on the euro pound. As you can see, I'm on the euro pound 4 hour time frame, and we're analyzing what's called the pattern that you see in front of you is a Gartley pattern. This pattern right here. So I'm going to change this from blue, and we'll go to orange, like this. And because blue is, it's a cipher pattern. And the Gartley pattern here, sometimes when you are finished analyzing this pattern, the stop loss placement is not at a 1-to-1, excuse me, or over that. This is actually under a 1-to-1 risk to reward. Okay. Now, I'll do this again. I lost the first half of the video, which is, it doesn't matter. We'll do it now. So, analyzing this pair right here, and we have our leg here. So we have a move up here towards the downside, and then we get a little pop up here, and then we get a follow through towards the downside. So this is our impulse leg from up here to down here, and this would be considered our next leg down. And I want to take the next leg down here and draw a Fibonacci ratio retracement from swing high all the way down to swing low. As we move down, what I'm looking for is a move all the way up into a minimum over 382, which would put me on pattern alert. And for this particular pattern, you can see that price action comes all the way up here and touches the 618. If we were at a 382, this would be a bat pattern. But we hit the 618, so this puts us on Gartley pattern alert, right? That's condition 2. So as we get a move all the way up into our 618 right here, now I'm looking for another 618 Fibonacci retracement from our previous leg of the move. So this is from our A point, excuse me, to our B point. So we grab a Fibonacci retracement tool and we go from A all the way to B, and you can see price action comes down all the way into a 618. Again, it has to be minimum of a 618, and that gives us both conditions for a valid Gartley pattern, or a potential Gartley pattern. Valid in this case. As price action pushes all the way up here, what we're looking for is a D point completion. This is our C point right here. We're looking for a D point completion with a Fibonacci extension tool from A to B back down in. A to B and back down in, okay? So this is our final condition. and we're looking for price action to move all the way up into a minimum of a 127 Fibonacci extension here. So you can see we get a move. Where is my candles covering it? We get a move all the way up into our 127 Fibonacci extension. Now, without I'm trying to cover it, because without these candles right here, right there, without those, price action comes up into the 127, and you would have a sell. Let's take this sell right here at the 127, and you would have your stop loss above the X point looking left, okay? And then your targets would be at a Fibonacci retracement from swing low all the way up into swing high. Okay. Now the reason why I draw it at the Fibonacci completion here is we are saying that the candles haven't completed yet for this particular scenario. Now, if we assume that price action is going to reverse from this area, then this is our Gartley pattern that has completed. And what I'll do is draw in the triangle tool here from X to A, A to B, B to C, and C to D. So we have our 127 Fibonacci extension completion. Okay. Now again, we have the Fibonacci retracement from our A point all the way to our D point completion. Okay. Now in this instance, as you can see here, we front run the target at 382, and we have our stop above the X point looking left. Now you can see it's 0.8 to 0.9, right? It's not a one-to-one. We don't have a one-to-one risk to reward. Therefore, we have a valid Gartley pattern here, and we can sell it at market, but that's only because price action is pushed higher in this case. However, if you're analyzing this prior to price action pushing higher at the 127 completion, we can't enter this trade because we don't have a minimum of a one-to-one risk to reward. Okay, so if I copy this, move that to the side here, because we do 2 contracts, which means we go for 2 targets, and we have our first target at the 382 and our second target at the 618. Now, the reason why I'm putting this video together, which is in alignment with the title and the thumbnail, is that we cannot enter this trade until we get a minimum of a one-to-one risk to reward. Now, how do we go about doing that? And one of the things that I cover inside the pattern trading education videos is the next Fibonacci level. Now, if we don't have a minimum one-to-one risk to reward at our case at our entry point here, then our case for entry is going to alter slightly, and our new entry point will be at the 1414. Okay, so I take it from the next Fibonacci level. That way we stick within structure and order using the Fibonacci ratios, which is what pattern trading is, right? Now in this instance, we would have to wait for price action to push higher. Now you can see as we get into our sell zone here, this is supposed to be more red. There we go. No, I don't like that. Yeah, that's fine. As we push higher into this sell zone here, my next entry level would be at a Fibonacci extension 1414. So make this a bit bigger. Oops. my entry level would be at a Fibonacci extension 1414. So instead of taking it at the 127, because we don't have a minimum risk to reward of 1-to-1, we have to now take it, again, in accordance to my rules and what we trade here, and what we go through our educational videos and trade in the live room. This is what we do. We use an if-then syntax. If price action at our entry doesn't match a minimum of a 1-to-1 risk to reward, then we have to take the next Fibonacci extension as our entry. So what would happen here is our new entry point would be at the 1414. Okay. Again, we front run that a little bit, line it up with the black tool. So our entry point would be at the 1414. Now here are our stops, okay, above the X point looking left, and here are our targets. And now we have over a 1-to-1 risk to reward on this trade. Okay, so we execute at the 1414. Now we still are within our sell zone, okay? And the Gartley pattern is at market, right? So if price action pops higher than this and hits our stop, then I want to get out of the trade, because most likely we'll be pushing towards these highs looking left, and then we'll be setting up a potential bat pattern, which we would get another entry to sell the market towards the downside. But on this example here, with the Gartley pattern, we now have over a 1-to-1 risk to reward. Okay, and all we did is we took our 127 Fibonacci extension level to the next Fibonacci extension level. And this is what I do with trend continuation trades as well. If we measure the trend continuation trade and my entry doesn't match a 1-to-1 minimum risk to reward, then I can't take that trade. Let's say the Fibonacci was at the 618, like this. Let's say we were in a bullish trend like this. And if I drew a Fibonacci from swing low to swing high, and we were at a 618 here, and my entry was right there, and my stops were below this level, copy and paste that, and then my targets at a retest of the highs, just for a quick example here, I can't enter this trade, can I? Because it's clearly not a 1-to-1 risk to reward. So in this example, I would take the 618 Fibonacci retracement, my entry, and I would move it down into the 786. Okay? Because at the end of the day, trading professionally, if you're doing this full time, the most important, crucial thing is preserving your capital. It's not looking for home run trades. They will come. We take what the market can give us. That's how we make profits in trading. What we're looking to do, again, the key importance here is preserving capital, protecting capital. So if we always have good risk management in mind, then we can set up really good opportunities. That would mean my new entry point for the trend continuation trade would be at the 786, and that would give us a really nice risk to reward. And you're always putting yourself in these positions because of good risk management. But again, you're following your rules. And what I wanted to hit on in this video is, how do you go about doing that? How do I change my entry point, and how do I change my profits and my targets and my stops? So in this particular case, profits don't change, the stop loss doesn't change, entry point changes, and your risk to reward changes. And again, in your favor, because that's what we're trying to do here. We always go about trading to be in the best position possible for those opportunities that are in our favor. So here, if we enter at the 1414, we don't have to consider this anymore. We'll move that over. Okay, so we have our new entry point, which is at the 1414. Our risk stays the same, our stop loss stays the same, and then we have a 382 for target 1. So now I'll copy and paste that, move that to the side like this, and then adjust that down to the 618. So now we have a really nice risk to reward. The key takeaway, if you've watched up until the end of this video, the key takeaway from this is you can set up really nice risk to rewards that are in your favor. And if you do this consistently throughout your entire year of trading, these are victories that continuously add up. And the byproduct of doing this well does and will result in profits for you. I've seen it time and time and time again. And we do it all the time. This is important to do. And the way you do it is you take the next fib level if you want to model after my trading plan and my rules here. But I would highly suggest that you don't just take my word for it, and that you backtest this and make sure that it works for you. Okay? Make sure that the pattern that you're trading actually produces a positive expectancy. And all a positive expectancy is that it wins more than it loses. That's it. You gain more than you lose over time. That's all a positive expectancy is. So if I have a Gartley pattern here on the euro pound, and we trade that day in and day out with consistency, and we know that it produces a positive expectancy, then we're going to make money over time. Yes. Trade with discipline, keep it consistent, and you will get results from this. But that's how I go about changing my entries to have a risk to reward that's in your favor. I use the next fib level. Okay, and again, I give an example with the trend continuation trade there. So this is a good trade idea for those who do trade the euro pound on the 4-hour time frame and are trading the Gartley pattern. But this is a good example with how I would adjust my entry stops and targets here. Okay, I hope this video was valuable to you. Please share it, like and subscribe. As always, be safe, enjoy life, and I'll talk to you soon. Thanks for watching.